Children, we start with question number 10. In this, two partners are there, Akhil, Bimal. Akhil gave a loan to the firm of 1 lakh on 1st October, and on the same date the firm gave a loan to Bimal of 1 lakh. They do not have any agreement as to interest. Akhil also makes use of his personal property for the business on which rent is 5,000 per month. Okay. Now, two things are specified over here. One, Akhil has provided loan to the firm and firm has provided loan to Bimal. Regarding interest on loan, you should be clear that if partner has provided loan to the firm, firm will give interest at the rate of 6% per annum. Okay, firm will give interest at the rate of 6% per annum if there is no agreement. But if the firm has advanced loan to the partner and there is no agreement, no interest will be charged to the partner. That is the concept of interest on loan. Okay, one is to the firm, another is by the firm. So at the rate of 6% we have to provide. Naturally, the profit for the year has been provided. Akhil has been provided loan of 1 lakh at the rate of 6% for 6 months. Again, he has advanced on 1st October only. So it will be for 6 months only on 1st October. So naturally, this figure will come to rupees 300. Okay. So interest on loan is to be provided at the rate of for 300. And of course, that rent amount. Rent figure is 5,000 per month. So 5,000 into 12, again 60,000 to be provided to Bimal. Okay, sorry, to Akhil. Show the distribution of profit before the adjustment for the year ending. Now, distribution of profit can be done in a statement way or by preparing profit and loss account. Okay, you have transferred the net profit from the P&L account as 1,03,000. You have enough profit, it is 1,03,000, and only the interest on loan is to be provided to Akhil. From Bimal, the firm will not take any loan because there is no agreement. So, to interest on loan of Akhil 300 and to rent 60,000. These two things will be payable out of this profit. Balancing the account 3,000, again 1,03,000, you will subtract 60,300. So this 7, 2, 4. This net profit will be transferred to net divisible to Akhil and Bimal. Now the profit sharing is 3:2. So this will be divided in 3:2 among the two partners. So this is your question number 10. In case of question number 11, now just read that question. In that also, Charu took a loan of 1 lakh from the firm on the same date, and Ankit and Basu has given the loan of 2,50,000 each to the firm. Two have given the loan, one has taken the loan. But it was agreed over here. It was agreed among the partners that Charu will be charged interest at 6% per annum on the loan. So on the loan from partners was paid on interest on loan from partners was paid on 10th April. It was paid on 10th April. The firm closes its books on 31st March. Means the interest was outstanding. The interest was yet not paid. Okay, it was still outstanding because it was paid on 10th April and you are having on 31st March. So this question you have to pass the journal entries in this case. Okay, so to just see, we will continue. Taking this question number 11. Ankit and Bhanu had advanced loan to the firm of 2,50,000 each, whereas Charu has taken the loan from the firm of 1 lakh. The dates are the same, 1st October 19. Okay. So naturally interest is for the rate of 6% only, and it was agreed that now Charu, who has taken the loan, will be charged interest at the rate of 6%, and we have to pass the journal entry. Now for interest on loan on 2,50,000, we will charge 6% for 6 months. So calculate how much? 7,500 rupees. Okay. And for interest on loan on 1 lakh, 6% for 6 months, that is rupees 300. So this interest is to be paid by the firm. 7,500 to both the partners. The firm will pay this interest and the firm will receive this interest. But it is said that firm has paid this interest on 10th April. It means it is still outstanding. So interest on loan is yet not paid. It is yet a liability. So for that case, if you pass the journal entry, it can be interest on loan to outstanding interest on loan. That is of 15,000, because you cannot credit it to the partner's loan account because you have not yet paid. On 31st March, you are closing the accounts. Now, if you pass the entries on before 31st March, it will be interest on loan to outstanding interest on loan. And when you pass the entries on 30th April, if you pass the entries on 10th April, when you are paying the interest on loan, then you will debit Ankit's capital account, Bhanu's capital account to interest on loan when you have paid interest on loan. Okay, so that time you will debit like this: 7,500 and 15,000. And so this interest on loan over here is debit and here it will be credited. So Ankit's capital account, Bhanu's capital account to interest on loan. And finally, when this outstanding will be closed, this has been paid. So outstanding interest on loan to cash. Okay, and after bus interest will be transferred to P&L account. So these two entries can be passed. Similarly, for this 300 amount, now this interest is to be receivable. Now this has not been said that partners might have received that interest. So it's a credit to P&L account. Okay, it is credit to P&L account. So in that case, we will pass the journal entry as for rupees 300, for which the partners, the firm is receiving the interest. Firm is receiving the interest. So here interest on loan is an income to the firm. Okay, so you can write partners capital account debit to P&L account. It can be credited to P&L account directly without passing 2-3 entries. You can directly credit it to partners capital account to P&L account, as it is an income to the firm. So 300 will be received from the partner Charu. Here partners capital account. Who is the partner? You can write the name. Charu's capital account debit to P&L appropriation account. Okay. Sorry, P&L account, because it is an interest received. It's an income. So here we complete this question. Question number 12. Nirmal and Pawan. Okay. Nirmal and Pawan. They are sharing profits in 3:2. The firm had given loan to Pawan of 5 lakhs. To Pawan, 5 lakh loan is given by the firm. On which date? On 1st April. And from Nirmal, Nirmal has given the loan to the firm. The firm took a loan of 2 lakhs. Firm has taken a loan of 2 lakhs from Nirmal on 1st October. So again, for this interest, the firm will receive interest Here the firm will pay interest. Now if the firm gives loan to the partner, unless and until it is agreed in the partnership deed, you cannot take interest from the partner. But here it is specified that interest will be specified at the rate of 10% per annum from Pawan. Okay. And as usual, the rate of interest for Nirmal is not decided, which will be 6% per annum. And the firm has incurred a loss of 10,000 as on 31st March. Firm has incurred a loss. So you will calculate the interest first. Pawan के लिए interest will be 5 lakhs, 10% for the whole year. Now it is mentioned on 1st April. So this will be charged for the whole year, which is 50,000. Okay, you will be taking 50,000. And here on 2 lakhs, you will be providing 6% for 6 months. That is 6,000. Okay. This the firm will pay, 6,000 the firm will pay, and 50,000 the firm will receive. Is it clear? Now, loss is of 10,000. So when we start preparing the P&L account, if you start preparing a small P&L account, prepare it in a proper format, students. P&L account. Okay. Debit side, credit side. Here you have the net loss of 10,000. But you are receiving from Pawan interest on loan. So that will be credited by interest on loan from Pawan. That is 50,000. And here 2 interest on loan that is given to Nirmal's capital account. 6,000. So now you can see you have got 50,000, but you are paying only 6,000. So when you balance this account, 50,000, 50,000 minus 16. So this figure of 34,000 will be the profit which will be distributed between Nirmal and Pawan in the ratio 3:2. Divide this and complete the question. Okay, thank you. We will start with the exercise of the next further for P&L appropriation account. But by then, solve all these questions till question number 12, which I had explained you. 1 to 6 also you do it. And let me know whether you are able to get it or no. Thank you. Okay, do well.